Okay. Hey there, fellow traders. Welcome to Wall Street Fanatics community, and this is another exciting live stream diving headfirst into the world of economic data, releasing up for a day of data-driven opportunities coming up tomorrow. So let's get ready to boost our trading game for tomorrow. So KKM, we have the Australian trade balance, this one. So in simple terms, we'll be exploring how much the Australian economy is exporting in comparison to their imports. So the last time the trade balance was a whopping 11.9 billion Aussie, and now the forecast is expected to be around 10.87 billion. So let's unpack this and see how this will affect the economy. So for this particular trade balance, we are supposed to see an increase in this figure for this to be positive news for the economy. So what this statistic measure is difference in value between the imported and exported goods and services during the reported month. So for last month, the trade balance, we can see a reduction. So this is the previous month, so this is not exactly good for the economy. So keep a close eye on the related stories around here if you wish to trade this news. So if you wish to even trade anything related to the Australian dollar, check if the news that is released is negative for the economy. Let's say you check the related story and you see some negativity surrounding the economy, you should just know that this Australian dollar is likely, take note, I said likely, not necessarily, but it will likely be on a bearish trend for some part of tomorrow. So a positive number indicates that more goods and services were exported than imported. So why do we care as traders? Exports demand and currency demand are directly linked because foreigners must buy the domestic currency to pay for the nation's exports. Export demand also impacts production and prices at domestic manufacturers, whatever. So this news is also called the international trade in goods services. So this particular month, we are supposed to see an increase. We are supposed to see an increase for this to be a positive one, but what we have here is reduction. So this spells some level of medium impact bearishness for the Australian dollar. Now this is news at 2:45 a.m. related to Chinese yen, but this is not tradable through many brokers, so we'll skip that and jump right off to 7:30 a.m. So moving to 7:30 a.m., we'll be digging into the Swiss Consumer Price Index. Here, sorry, this guy. High impact events, 7:30, the Swiss Consumer Index. So last month, prices went up positive 0.1%. But this time we are expected to dip to negative 0.1%. Let us decipher what this involves. So this is still negative for the Swiss currency. This forecast, it means they are anticipating bearishness for the Swiss currency. So that is for the CHF. Just like the other one, keep a close eye on this section to see every related news, and you can actually do well to backtest. And this news is actually mostly not revised, so the figures also tend to be more concrete. Now we have next the OPEC JMMC meetings. These discussions among the oil producing nations could send ripples through the market, influencing not just oil prices but like broader trend in every oil consuming economy. So keep an eye for any updates that could shape our trading opportunities surrounding this particular news. So just click here. So you click here and this guy is not clicking. Okay, fine. Yeah, so you keep a close eye on relating stories. So let's see the FF notes. OPEC meeting attended by representatives from the 13 OPEC members and 11 other oil-rich nations, whatever this is. So you do well to read this, but this is likely going to affect the world market. This is likely going to shake the world market. Now, as the clock strikes to noon, we'll be delving into the Bank of England monetary policy reports. This guy here. So this is all about the interest rates. It is something related to interest rates, and this guy too. The unanimous decision previously was 702, and this month we still expect the same for the forecast. So now, given the complexities of all of this news, the volatility can possibly be random. So I'm not sure I'm going to be holding anything prior to 12 p.m. that is GBP related. So they also have the GBP bank rate, same 12 noon. The previous rate was 5.0, and there is a forecast of 5.25%. And this particular news spells bullishness, but you see all of these, they are not measurable, there are no statistics, and this one is kind of neutral. So this looks like a whipsaw. I'm not going to be likely partaking prior to this. So I'm going to let the dust settle. I would like the market to tip its hands to me before I make any decision. So I might stay out of this market during this whole period. And if you see, we also have this coming up by 12:30. The BOE Governor Bailey takes the stage. His words hold weight in the financial markets after he gives the speech, so that will give us insight into the market's direction. So from this 12, anything prior to the 12:30, around the 12 p.m. to 12:30, I am not going to be partaking in any market related to GBP. I will prefer to stay out. I will stay out because this is going to be a whipsaw move up, down, and in every sort of direction. Then jumping over to US at 1:30. Here we have the first US event coming up at 1:30. Is the unemployment claims data. It is all about how many people filed for unemployment benefits. So last time we had 221,000, and this time we are eyeing a forecast of 226,000. So let us see how this can actually impact the economy. So for unemployment claims, people who file for unemployment related benefits, you are supposed to have a reduction in this figure for you to have positivity in your economy. But what we have here is an increase, forecasted increase from 21,000, and now we have 26,000 people filing for this benefit. That is 5,000 extras filing for this benefit. So that is not like some positivity for the economy, but the margin is not that wide. So that forecast can easily come out wrong. And finally, our final stop at 3 p.m. This guy here, our final stop at 3 p.m. is the US ISM service PMI. So think of this as a report card for the US service sector. So last month the reading was 5.39, and currently the forecast is 5.31. So this is usually anchored to indicator of 50, and anything above 50 indicates industry expansion, and below indicates industry contraction. So last time we expanded to 53.9. Now even if we are in the phase of industry expansion, you can still see this is a reduction from 53.9 to 53.1. So this is mostly bearish but slightly bullish for the economy. So this will likely have some mixed reaction for the ISM services PMI for USD. Now some part of my live stream in the morning was cut out, connected to this one. Okay, perfect. In the morning, a huge chunk of it was cut out. Like the stream was over 20 minutes long, but I think what was uploaded to YouTube was 7 minutes only. So this was the part that got excluded. So I had my technical analysis for DXY, which is USD index. So at the open of today, I was looking at the possibility for price to hit this level. So I was not really looking for that bearish trade for today to hold much magnitude. So I stayed out of it because, as you can see, DXY have bullish targets to meet for the week, and it has, as at this point when I dropped this initial stream, it has not hit this point. So I was looking at the possibility for us to fill this imbalance, or the possibility for us to even visit this high. So that was why I did not take the trade today. The trade today is this guy, this one, the ADP non-farm employment change. So the ADP non-farm employment change. So yes, this was my concept that the USD had potential imbalance to rebalance in this region here. So that was why I decided not to be bearish on USD, because my fundamentals did not exactly tally with what I was looking out for as my weekly target on USD. So I passed that, and as you can see, we got an actual that became bullish for the economy, like a better than expected result. This non-farm employment change measures the change in number of employed people during the previous month. So when the employment goes up, rate of people employed goes up, that is something positive for the economy. So given that I had this whole bullishness in USD, I did not really find it interesting to sell within today's market, and it is possible we might have seen the high of the week, given that today is Wednesday. So most cases, 60 to 70% of the time, we will likely create the high of the week on Wednesday or early session on Thursday. So I left this, and I'm not in this sell because of these objectives I looked at here. So all of these are the evil projections. So you want to make sure, do not forget to keep a close eye on the related stories here. Make sure you understand the themes of those related stories, if they are bullish or which part you are trading. Are you trading prior to the release of the news or after the release of the news? Which of the impacts do you want to trade? So like for this one, it's not a financial advice market prior to the release of this 12 p.m. to 12:30 news, because it will be a whipsaw. Like, you understand what I mean by whipsaw? Whipsaw is simply zigzag. So you might likely lose if you buy and still lose if you sell. So for that reason, I am not going to be engaging until they release all of the data. So if they release the data and I see that a majority of them spells bearishness, then I should be looking for sell opportunities for GBP. But if they spell bullishness, then I should be looking for buy opportunities for GBP. So that's enough stream for tonight. I think I've been able to decipher all of this news and give you guys a clue on how to think about them. So come tomorrow, I'll likely maybe stream again, maybe during the event or before the event or after the event, to talk about the impact and maybe to drive some lessons on developing your knowledge and understanding on how to trade these, and possibly give some technical insights as utilize. So there you have it, a simplified yet comprehensive preview of tomorrow's economic data releases. So remember, knowledge is your best asset in trading in the world. So if you found this breakdown helpful, be sure to give us a thumbs up, subscribe, and hit the notification bell. So until next time, happy trading and good luck.